All right, everybody, welcome back to Matt Money. Walk back to the Cashflow Chronicles. We are always here with Chris Patel, the man, the myth, and the legend. Probably going to do a quick, short one here today, but we're just excited. It's the end of the year. We've done rather well with respect to returns this year. I've been arguing with people on X all day, just giving some feedback to some folks, But either way, happy that everyone is doing well with respect to the markets and really still continue to be at all-time highs. I don't think we're out of juice as of yet. I do see some pullback in the future, but other than that, we'll see what ends up happening. Chris, what are your thoughts?
Yeah, I mean, we're due for some sort of I don't want to call it a correction. That's probably the wrong word. Um, some leveling off. Some of the euphoria has been a little bit nerve-wracking to see because you're seeing really shitty companies ride up, and you're just like, hey, there's no real fundamental, you know, like case for this thing to be up so much. But that's how the market works sometimes. Sometimes the markets are driven more by psychology than they are by reality. And so when things go out of whack, you just have to sit back and relax and just let the markets do its thing.
Yeah, I think the market's giving people some egos, I think, the past couple weeks, just at how much things have run up. And there's some companies that, and I think this is normal, right? This is just the normal chain of business. So you see this flying in and out all the time. So this isn't anything that's not normal, but you see these people coming out of the woodwork being like, I told you so, and thinking that they're basically the new Warren Buffetts of the world. And some sort of reality is going to smack them in the face, right? And I think what we're on the precipice of is I still think everyone assumes, and the market is kind of assuming right now, 6 rate cuts for next year. Whether that comes to fruition, I don't know. But I just think that with everything that's going on in the February, March timeframe, it's going to become fairly evident that we aren't going to potentially have as many cuts as I think people anticipate. And with that, I think the market will pull back a little bit, but I still think we'll end up pretty high going into next year anyway. So I think we'll cross about 5,000 on the SPY.
Yeah, I mean, a lot of businesses have been figuring out how to deal with this higher rate environment. So, they've passed on a lot of those costs to consumers. Consumers have been strong enough to pay them. So when rates go down, it's going to be it's going to go to the benefit of those companies, because at that point, the companies will be able to just eke out a little bit of higher margin, because typically you don't see price cutting unless like it's something that's forced. Yeah, so it'll be interesting to see what happens in 2024. But I'm bullish with the market. I think that there are pockets of opportunity here and there, but nothing that would make me want to like jump into the market so crazy right now. So I'm not selling any positions that I have. I'm just letting them do its thing. But I'm also not like adding substantially to any of my positions. I'm waiting for a meaningful pullback a little bit, where I think that there could be some great opportunities to pick things up super cheap and just let 2024 do its thing. My biggest concern is paying too much for something too early, and then the rest of 24 regretting that purchase, and now you have to wait until everything catches up, right? So when you buy things in euphoria, you tend to have to wait now for everything to come back. And so I learned that lesson the hard way a long time ago. So like I said, I'm not in a position where I'm selling anything, but I'm also not in the position where I want to buy anything either. And the selling part I don't want to do because I don't want to pay taxes. Bro, I have enough taxes coming due this year. Like I am scared to look at my tax bill this year. I mean, it's a good reason. I've made a lot of money this year, but also now Mr. Taxman is going to come for his cut. So we'll see what happens.
That's the thing. I mean, you could wait. I mean, you've bought a lot of things short term as well, and you've done really well. So it's like you might have to wait 365 days before you can truly sell those things and actually get a preferred tax rates, rather than maybe some of the shorter capital gains rates that or the short term capital gains rates that you might be paying if you were to sell today. But yeah, I agree with you. I'm not rushing out to buy much, other than just my consistent adds to the market in the 401k and stuff of the like. But I do think that there's still opportunities of where things have yet to truly run. I think that there's been some companies that have been fortunate to run, even though I don't think they deserve to be on the run. But other companies as well that are still kind of lagging behind that do truly see good potential in. But I'm with you. It's like they're some of these companies are still doing okay today, but is there going to be an opportunity in, and I'm not trying to like time the market by any means. It's like I'm not going to be hurt whether or not these companies I don't invest in these companies or not. But it's like things that have already have substantial positions like Rocket Lab and stuff of the like. It's like, should I wait until we see a pullback in the entirety of the market before we really start to absurdly deploy more and more capital? And so I'm being a little bit more conscious. It's like, I have other things that I could apply this capital to, right? I could shore up some cash. I could focus on putting it aside for another real estate deal. So it's like I'm not entirely rushing to put all this money to work like I was, say in October timeframe of this year, or in October timeframe of last year, where I was literally finding everything that I could, eating ramen, to be able to save as much as I could to be able to throw into the market. So I think we're just slightly in a different time. Markets are back kind of in terms of all-time highs, in terms of where we were back in 2021 timeframe. I still think that in terms of being equivalent, we'd still need to get another 10% or so before we are an equivalent all-time high. But even still, I think, we're in a better space than we were back then. And I think we're better valued than we were back then, but it's not a reason to be rushing. But like you said, there's still pockets of opportunities. Like last night, there was a big debate on Finance Junkies with Chris and or not Chris, Steven and Amit, and they were talking specifically about Apple and is it overvalued or is it undervalued or what have you. And I just think you have that space right now to be able to debate, right? You're not in a place where everything is so cheap, you just need to throw your money into it. You have the opportunity to sit back and pick and choose. And I like that kind of market because you'll always find something. Like even in markets like a perfect example of this, markets were doing well in 2019 timeframe, but October 2019 timeframe, I saw Caterpillar trading at below $120 a share. And so I said, well, why is this, right? This is a great company. It's not going anywhere, well run. Let me pick some up. And it was a great swing trade. I ended up making close to 100% return over the course of the 2 to 3 years that I held that opportunity. And so you have the opportunity to sit back sometimes and pick and choose. And it's not saying you're trying to time the market. It's just you're scouring the entirety of the market to find those things where you see the outsized returns. Late October this year was a perfect opportunity because everything was getting hit because of interest rates and stuff of the like. And now, obviously, with the pendulum swinging the other way, it's been kind of the ability to kind of rise on that opportunity. But if you've done that, it could be an opportunity to take some cash or pull some profits and get some cash to be able to look for and be more patient about where you deploy that capital next.
Yeah, and you can also, if you really just always want to be in the market, you can always look for things that are near cash-like returns and just stick your money in that and not really worry about it. Where, you'll see the fluctuation a little bit here and there, but you won't see it by much. So we'll see.
Yeah, very good. All right, well, let me bring up our portfolio because I don't know. I'm sure we did on Monday, but we're looking pretty hot the past day or two with TellZ, and it might be an opportunity for you to chat a little bit about what's going on with Tellurian to make it pop up, because we're actually positive on that opportunity now compared to being down. I think we were like 15 or 16% down on Tellurian before.
Yeah, just a PE firm has been buying like the common shares. And so there was a filing a couple of days ago where it said, they had taken a pretty outsized position in the company, which means that, this could be a possible either one of two things. Either some activists are moving into the space, or there could be some acquisitions, or there could just be some really long underlying value that other people may not be seeing. Either way, the TellZ position got bid up pretty significantly. And I think eventually we do see someone stepping up, whether it be, I have a hunch on who it could be that steps up into a long-term, uh, maybe even equity role. Who knows? But they could end up really like sending Tellurian higher, in which case Telz would be the biggest beneficiary. So, from a risk standpoint, I don't want to be in the commons for Tellurian because anything can really happen, and you never really know. With Telz, at least there's assets that are backing it somewhat, so you have a little bit better of a safety profile, and also you get that nice return too. So like I said, Telz is the way that I would play this, but I risk. This is one of the things about social media that I'm not the biggest fan of. I can't convey my level of skepticism, and I don't want people following into this trade
Mhm.
only because there is logic behind it, but I know my risk tolerance, other people may not. And so I hesitate sometimes explaining too fully on what's going on because it is a very speculative move that we're making in this thing. And like I said, there have been other more speculative things that we've spoken about in the past one on one, but I've never really shared on here, primarily because I don't want people to get too happy with the trigger and just start buying things that they don't understand, and then trying to explain to them what they're actually buying and what they're actually doing. Like even the Brookfield one, I'm starting to consider that a bad move on our part, not because it's not a good investment, because I think it's a great investment, but I think a lot of people don't necessarily understand how preferred equity works, and the amount of time that takes to explain to people everything, maybe a little bit more on like, it just takes more time to do it. And so,
Yeah.
and also there's a lot more nuance than just buying a stock. When you buy a stock, you're buying ownership in a company. When you're doing preferred shares, you're buying partial ownership a little bit, depending on if it's convertible or not. Then you also have a fixed price. So it is a lot more complicated, but it's also profitable. So I don't know. Like I said, it's something that I'm dealing with internally to figure out how to bring these investments to light
Mhm.
without having to publicly speak about them and then explain all the little nuances and intricacies behind them, you know?
I mean, I feel that as well, right? Because I've been kind of doing this for 6 or so years, and people will come after you, and they'll be like, "Well, I put 15% of my portfolio in this, and it went down, so you're the bad guy." And but it's at the end of the day, it's just like you know where your entrance is, you know where your exit is, you know what your risk tolerance is, and it goes
Yeah.
back to personal finance at the end of the day. And it's like for us, this is eventually going to become an income stream portfolio where we can, take this and make a little bit of cash every single month off of it, and be able to kind of do that. But for now, it's like we're diving in and out of things at a pretty quick pace. Like we've cut some things early, we've held on to some things as well. So it's like you got to kind of have an idea in mind with each individual position why it's there, right? And
Yeah.
and some things might change. Like you might listen on an earnings call, but this goes back to your due diligence piece, which I push people on, and I think that they think they're doing enough, but I don't think that they are. They might hear something in an earnings call, and you might just start to see the ground shifting below their feet, but they might not have, I guess, the true lack of emotion involved, or they might not necessarily understand how that might be changing the risk going forward piece. And at the end of the day, they might end up negative on the position and sell out at the wrong time. So it's you kind of have to take these things for what it's worth, right? And understanding, is it a swing trade? Is it going to be something that you hold on to for 90 years or give to your kids, or because like, for example, Occidental, I don't think that that's something we're going to hold on to for the next
No,
20
I
years.
already trimmed it. I already trimmed it out
Yeah,
of my position because I got a nice 10% that I was looking for. I was able to get the return that I needed and get out. But see,
exactly.
that's the other thing. We're gonna have to be very careful with this portfolio because there are certain companies in here that are very trading. They're more just trades rather than long-term investments. And I don't want people to think that everything here is long-term investing, because sometimes it's not. Like Oxy definitely is not. I'll tell you right now, Absolra is a very long-term hold, but it's also going to fluctuate in price.
Yeah.
AMT is a long-term hold because that's an income generator. BPY, it's a long-term hold, income generator. Bros, it is somewhat long-term, but if it gets too frothy too quickly,
Yeah,
then it's
I'm with
something
you
that's
there.
trimmable.
I'm with you there.
CCI is long-term income generator, that's compounding. Celsius is all about a swing trade, but it could end up being a long-term. But it just depends on the data and the news coming out of the company. Like, is this really a monster, or is this a fad that eventually dies, right?
I'm with you there.
And the
Yeah.
thing is, like, the story is evolving. Orsted is one of your picks, so you know about it more than I do. Extreme Networks is like a medium term play on private networks that I think in a year or two will do exceptionally well. But I think there's a turnaround scenario. HashiCorp is, in my opinion, it's literally just a turnaround play. Just let it get back to some value and eke out a 15% return in a month and a half, 2 months. It's freaking good.
Yeah.
Next decade is a long term hold because I told you, like,
They won't be drenning
but
or anything until 2028.
right. And that's why we only have $1 in it right now. We're just taking small chunks of it. This is not something that you take 5% of a portfolio and you put it into and hope that things work out in 10 years. You just over time. So Oxy is a trade on oil prices. It's a commodity play. So it's not a thing. You're more bullish on Rocket Lab all the way into the future. So that's a long-term play for you. TellZ for me is like a trade on whether Tellurian gets an FID. If it does get an FID and this thing rockets up to $24, $25, we could trim it. I have no qualms about that. TQQQ is one of your things.
It's a moonshot, my guy. That's a straight moonshot. That's just
see, this is where I have to disagree with you a little bit on TQQ. You're not supposed to use TQQ like an investment. You're supposed to use it as a trading vehicle. But I know a lot of people that have done very well using it as an investment.
It's my yacht fund, my guy. It's my yacht fund. I don't just have it here. I'll say that.
Yeah. Verizon for me is somewhat like medium to long-term play. I think eventually Verizon gets back to its normal trading range of about 50s, so it's just going to take
I'm
some
really
time.
surprised that Verizon, with like the 20-year and the 10-year continuing to rocket down in terms of yield, that this one is not doing better.
It's because there's a lot of debt. A lot of people keep looking at that debt figure and freaking out about. I mean, dude, this is, I think this is like the third or fourth most indebted company in the Dow, I think, right now. Like total debt, they have 150 to 70 billion in debt, but they also have a ton of cash flows too, man. So it's not. This is where understanding how the debt markets work gives you that edge over someone who's just purely looking at it from from an equity standpoint, where they just see all the debt and they're like swearing off of it. I'm just like, no, just take a step back.
But I want to step back into something because you hit it on the head, and this is something I've been talking about on X all day, which is doing your due diligence and not just jumping in both feet into what somebody's buying. This portfolio is literally just one level removed from Chris, and already missed an exit point with Occidental. Right? I looked at it yesterday or 2 days ago, and it was up around $9 or so, and I was like, it's Chris's. I'll wait for him to kind of get at me before I hit sell or anything like that. I think that oil is going to be kind of in this range now, the low 70s to high 70s, depending on if you're looking at WTI or Brent, for a little bit of time, right? The Red Sea trade is over, right? So that piece is, kind of gone away. But this is just one layer removed, and we lost out on 4%, right? So it goes to show that if you're entering these things for the wrong reasons, or you're not looking at it from both ends, where you're entering and where you're exiting, you're going to get effed. And I think so many times, people think, oh, I'm just watching these guys, and these guys do their due diligence. It's like, no, but you also have to do your due diligence. And are you watching every move? Because Chris is making moves every day, and I might be buying into something every day, or I might be exiting something, right? I might be selling Pepsi, I might be selling X or Y or Z. And if you're not watching like a hawk and you're too busy watching somebody else, then I have people come in and they're like, whatever happened to your X, Y, and Z? It's like, I sold that a year ago. Like, when's the last time you watched one of my videos, right? Like, and I'm not saying you have to, but I'm just saying this is the problem with being somebody that's strictly investing based off of somebody else's YouTube portfolio or somebody else's convictions, because they're trading for them, right? And they're posting it for them to document and everything to like. If you're not on the same strategy or understand what the play is, you're going to get lost in the sauce and end up likely negative on the position and be like, this guy doesn't know what the hell he's talking about. Meanwhile, this guy over here has already made his 10%, right? And he got out of it while he could. But you're sitting there being like, oh, he's trying to hold it forever. And it's like, not holding
Yeah.
Occidental forever.
The other thing is also there are certain companies and certain positions you should hold forever. Like the Googles of the world, the Microsofts of the world, they're not going anywhere. Amazon's, those are like your rock solid, like they're going to keep your portfolio grounded. S&P 500, the SPY, like I have SPY positions like that I've never sold. I have my, what was it? My wife and mine, we're completely in our retirement, just index fund. Like we're not touching it. I'm not trading in there. I'm just whatever, one, I can't really trade it because I have very limited amounts of things that are in there because the company limits how what you can invest in. But on top of it, there's no reason to be so focused on market gyrations and stuff like that. So it just depends on what your intention is for that specific account. Now, for me right now, when I see mispricing and opportunities in the market, like I don't mind jumping in. So I think right now American Tower like I'm up almost 20-30% on my American Tower position. I'm up on my Crown Castle position. My Verizon position is doing really well. And there are certain themes behind each one of these moves that makes a lot of sense going forward, and that's why they're more long term, medium term, and short term. And I think that's the key, right? Where you have to know how you're allocating things to your portfolio. So 50% of my capital is in long term. I would say another 25 to 30% is in medium term, and then whatever's left is usually in some short term trading here and there. But it's never something that's like an outsized thing for me. So
Well, I just wanted to give a shout out to 100 people in the stream right now. Much appreciated as always, with you guys showing up to Cashflow Chronicles. Chris, I'm not sure if you have any other thoughts with respect to, thoughts about, I guess, trading out the rest of the year. I know tomorrow is pretty much the last day where the market's going to be open, and then maybe early first quarter, second quarter sort of thoughts, like where. I know you've already mentioned that you're long onto Google, but I think you might have trimmed some of your Google as well. If I'm trying to
just a
remember.
little bit, just a
Yeah.
little bit. But I have a lot of options exposure to Google. So I have options exposure to Google, to Amazon, a little bit on Verizon. So I do have some options exposure. That like makes up the difference between me trimming a little bit on the long side, on the equity side. So, it's just one of those things. I am looking at some small cap. I have some small caps that I've been buying recently, very small amounts, but they're only so that I can track their performance over time. Because I think a lot of times what happens is if you take a small position in a company, you're more likely to track it than if you just write it down somewhere.
Yeah.
And basically, like right now, I'm doing a lot of due diligence on a company called Wolf Speed. Have you ever heard of them before?
No.
No, so it's silicon carbide. So I'm doing more research on it. So I just bought a share in my portfolio, and it's just sitting there. So now I'm
I
just
think
like,
it's
oh,
actually a really useful strategy. I can't tell you how many times I've been like, I think this is still on a downtrend. Um, I think it's going to go down a little bit further. I don't need to buy it, but at the same time, 5-10 months later, it did hit the target that I wanted, but I lost track of it, and I never
yeah,
got able to get into it, even though I would have bought in at that price, right?
yeah.
So
I mean,
I like that idea.
if it's visible in your face, you're more likely to keep track of it, right? So, like I said, I have a portfolio that I've created that's just literally small cap names that are very interesting to me and that I've just been slowly keeping keeping like tabs on. Some of them have been doing really well. It's like, oh damn, that's crazy, you know. But then also there's other things that have been running that I'm just like looking at. And I'm just like, why the hell are you running? Like this makes no sense whatsoever, you know. But it is what it is.
There's a lot of that. I see a lot of that happening, and I see a lot of people's egos starting to blow up for those things in particular. And it
I say
gets me
their
frustrated.
egos are fine, man. You know what? If you get something right, bro, go ahead, celebrate the shit out of it. If you want to use that, you want to post that on social media, go ahead. It's all cool. I've done it. You know, it's not. I think when you do have some measure of success, you should be able to celebrate without people judging you. You know, it's not. There's nothing wrong with that. If you overdo it though, then I got something to. Then I'll just be like, bro, calm down.
Well, that's
Like,
the thing. I think most people they'll see that, they'll get the ego, and they think it's going to continue to run, and most of the time it doesn't, right? And then it comes to bite them in the ass.
yeah, yeah.
So there's that. I did want to state, I'm trying to pull up my internet's being crappy. I need to get out of Comcast, my Xfinity, man. It's just no matter what I say, they regardless will just be like, we're not throttling your internet, but it's like as soon as I reset my router, I'm up to the 250 megs as expected, and then immediately it drops down. So I need to give them an ultimatum to make it right or what. But we
See,
got
I'm
some.
telling you, see if you got some FWA near you, man. Verizon is just launched their C-band all over the country. Put your name on the waiting list, and when it comes up, they'll alert you. You
Yeah, I
know,
did for Verizon, and I'm trying to remember who else. I think it might have been
T-Mobile.
T-Mobile. Yeah,
Yeah,
and I haven't gotten an email or anything from either of those guys. So I
yeah.
might call them personally again because Xfinity is kind of pulling this crap. But we got some dividends as well from TQQQ. So there's that piece. It was like 41 cents or something like that. I reinvest it in my personal account. Let me just pull it up on my phone because this is being slow up here. So let's go to Fidelity. Let me exit this.
You know, it's
And
a very interesting comment by Dylan Fitzgerald. If you could pull that up right there. I had no idea that eBay was buying back its shares so quickly. Let me see. 1 second. See, eBay's like one of those companies that you just leave it for dead, right?
yeah,
But their EPS is good. Their earnings, their net income is good. Like they're still generating cash. They're still generating profits.
believe it or
What's
not,
the
even
share
my
count?
nephew, who is 11, 12 years old, he went onto eBay to go buy stuff. So even the younger generation is using it.
Yeah.
So
Well, look at their valuation. It's not that bad. Operating income is very flat, but if you look at their free cash flow, they have free cash flow. They have liabilities of about 10. Long-term debt is about 7. It's not that bad. Free cash flow margin is there. Valuation's not high. Let's look at their share buybacks, see what's going on with that.
I don't know if you're sharing or not.
No, I'm not sharing. I'll
Okay.
share it. Hold on 1 second. So let's take a look. Cash from financing. Okay, net. Ooh, interesting. Yeah, they have been buying back shares. Is this on a quarterly basis? Yeah. Okay. So they bought back a lot of shares here, which was 2021, but they kind of slowed it down, but they reaccelerated here. Oh, interesting. Yeah. Let me see this. Hold on a second. eBay outstanding. I'll have to look at their compensation plan, or what their compensation looks like. And ooh, okay, that's interesting. That's very interesting. Look at that.
Yeah, buying back.
Bought back half their float.
Jeez.
That's goddamn. Huh.
Was that
What is
15% per year? What is that? What was that?
quarterly growth? Well, this is a quarterly growth in terms of like share count. So,
Yeah.
but it's just negative. So it means that they're just buying back shares right and left.
Hmm.
What does this mean for their EPS though? Their EPS. Let me see.
I mean, hopefully it's just flying through the roof.
It should be. Yeah, but their EPS hasn't been tracking nearly as much. I mean, they had some good years in 2021. Look at that EPS number. But I mean, it's growing slowly, trailing wise. I'll have to look into this more. eBay is one of those companies that like a lot of people left for dead, and maybe it's something that it's worth looking into. You never know.
It might be. Yeah, I mean that's the thing. It could be ended up like a PayPal, right? Where everyone kind of thinks PayPal's, out of favor. But if you're able to buy back enough shares and just hit it home and buy it back in a meaningful amount of, like AutoZone did, then it could be an opportunity for you to 2-3x just based off of waiting for buybacks, which it's killer when you have something like a Google, which is doing it at such scale, or an Apple. Even Apple's bought back 40% of their float. So over the past 10 years. So it's, if you're able to combine it with growing earnings on a bottom line basis and with buybacks, it's just even double killer.
The only thing I'd say, Jeremy, is that I'd be worried about Facebook Marketplace, right? Because I've bought stuff on Facebook Marketplace. I had a great transaction. I mean, it was more local, and I've also bought things on OfferUp. That was good too. That was eBay has its customer client also, but I'm not sure if there's a really big moat around it. But then again, I haven't, like I said, I haven't done research on eBay, but they're profitable. They're making money. So, yeah, let's see historically, and they're trading at, look at this, Matt. They're trading at a significant lows to their 2021 highs that they have not recovered from yet. And their PE is sub 10 with a 2.3% dividend yield. eBay? I am very shocked at seeing this right now. Huh. Look at this. They were almost up to $80 in 2021 at the highs, but then they kind of went down. Only have a $22 billion market cap. They're generating, okay, this doesn't make sense. This definitely does not make sense. All right. Definitely got to research this one more, because this could be right in the wheelhouse. It
could, if like medium or mid-sized cap companies to come back into favor and trade more, from a 10, 11 PE up to 15. I mean, it's going to be a 30% return, if it normalizes in that manner,
Yeah, I'm definitely gonna do more research, man. I got to listen to a couple of conference calls, see what they're doing in order to maintain this thing. Because the one thing that does seem off-putting is just their annual revenue. It hasn't been growing very much at all. It's actually, they're losing a little bit, but it's flat. It's flat, but that doesn't mean that it's bad by any means. It just means that, hey, like, what are they doing with their excess cash flow? And if they're just buying back shares with it, that's great, because that means that now your EPS will keep growing. So if you look here, CapEx, they're not spending that much in CapEx. So if their operating cash flow is almost, like last quarter, they did almost $1 billion, like 860. They have $3 billion in cash. Yeah, something doesn't seem right. I definitely got to take a look at this. They're generating almost $1 billion in free cash flow.
Yeah, I guess maybe the people are fearing that, if they're not growing revenue, they're reliant solely on the buybacks, and are the buybacks sufficient enough to truly prop up the stock?
I mean, they've got more than enough to cover their buybacks. Like, look at this. If your free cash flow is almost okay. If your operating income is about 862 million and you're buying back 600, I mean, dude, this is a no-brainer. I mean, but then again, how is this fucking possible? Is this just like a really well-hidden secret that I don't know about?
I don't think it's well hidden. I think it's just the fact that it's flat. And are you going to reward it with a 20, 25x PE if it's?
But it's not. It's an 8 PE. It's an 8 PE.
Yeah, but revenues can decline. I mean, I don't know. I'm not saying you're wrong. It's just, how much are you willing to bet on the buybacks continuing and it eating away, and how long would you hold on to it as well, right? I'm not saying you're wrong. It's just
Yeah.
you have to plan your exit strategy for it as well.
I don't know. I'll probably take a look. I mean, maybe it's something that management will clarify sometime, some in their earnings calls. Even I never even bothered looking at it. So yeah, I'm definitely gonna just I'm gonna have to look into their
I'm not saying you're wrong, and I think
yeah.
it's honestly something to look at as well. I just think it's the same reason why I didn't really get into PayPal, right? If I'm going to put capital to work, I want to invest in a company that's truly innovating. And I know some folks have the thought process of they have their digital currency that they're coming out with, and that might be the savior of PayPal to be able to help with the liquidity aspect of things going forward for a multitude of different businesses and stuff of the like. And they know more about it than I do, but to me, it's not something. I'm more of a take less swings kind of guy, Chris. You know that, so
Yeah.
like my select few companies are my select few companies. So it doesn't fit into my sort of wheelhouse where it's just like, is it discounted? Yes. Is it deep discounted enough and growing? No. Is it deep discounted in a place where you could see it normalize? Yes. And I think then you all have to really worry about the macroeconomic environment, right? Is it going to drag from an 8 PE up to a 13 PE? That's going to be a phenomenal return, right? If it's able to keep earnings flat, that's going to be absolutely a absolute rocket show of a return. But my fear is like, will that happen? Will you see an opportunity in, say, the next month or two in a pullback to be able to get at a better price? And I think that that's more likely to be the case. But that one's going to be tough. Like, is it actually going to continue to grow? That's what scares me, right? Is it going to end up being like earnings end up rolling over and you get stuck with the bag? And that's
I
the
mean,
thing that scares me about
I
it.
think I think this is where you have to really dig down deep into the management and see like, okay, what are the growth initiatives that they have? And by the way, always look at incentives for management too to raise stock prices. I mean, one of the reasons why I'm so heavily in, well, not heavily, but even though I have a good chunk of position in Paycom, especially when it collapsed, was I looked at that executive comp and I was just like, whoa, 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 hold on a second. Executive comp is all based on share price appreciation and they're generating cash flow. Dude, you know what that means. That means that they're going to be buying back shares hand over fist. So it made a lot of sense to go that route. So they said expect minimal free cash for Q4 because of timing of interest rate payments. Okay. I will definitely do. Is that maybe they're talking about somebody
They
else?
might have been talking about somebody else. I don't know. That's the problem sometimes with the chat is that
Yeah.
you can't always keep up with exactly what they're talking about. They're talking about SGLC, SLGC. I don't even know what that is. So
Yeah. Yeah. Like I said, I'll do more research and homework on it. Yeah, eBay is a household name. I don't think I haven't bought anything on eBay for like at least like 5 years. I'm trying to think last thing I bought. My brother, I'll ask him about it. He buys magic cards on eBay. Like
mm.
because he's got, I think he's almost got like 30,000 to 40,000 dollars worth of Magic the Gathering cards on there, and so he's bought them through eBay, you know.
The only thing
So
I've sold on eBay, I used to buy a lot more Air Jordans and stuff when I used to be hip. And
yeah.
and I sold some stuff on there just because, right, it makes it a little bit easier. Then I started moving to Facebook Marketplace and really just anywhere that I could get a sale, I would sell it. But yeah, I don't really do the shoe thing anymore. I more so focus on stocks. That was like before I really got involved in the stock market. I was like having so much extra money and I was putting away stuff into my 401k, but then I still had all this extra money sitting around. And so I would buy like shoes and like lower end watches, like some Citizens or Seikos and stuff like that. And then I started getting into more like, why don't I invest more in the stock market? And then that's obviously where the last 10 years have been eaten up. So
I have a friend who's been buying and selling on eBay. I'll reach out to him to see how he's doing, but he does mostly auto parts. Where what happens is, I think his someone in his family owns like a junkyard, and so one of the things that they do is that before they junk a car, he'll just like take all the pictures and stuff of the spare parts, and sometimes if you think about it, the spare parts are actually worth more than the junked car. So a lot of times they'll get into insurance companies will come and they'll consider it like a total loss on a car, and so it's not really insurable. But the thing is, all the parts are still original OEM parts. 99% of the stuff is still good on the car, so it's like, things that you would not think are very like necessary. But like, here's an example of something. One second, let me just pull it up. Like, okay, can you see the screen right here?
Yeah.
Like a 2014 to 2018 GMC Sierra headlight. And I know that sounds like something really small, but it's like, hey, dude, if you have a 2014, 2018 GMC Sierra and you need a replacement, here you go for $323.
Yep.
So
I have a perfect example. So my dad bought a 1993 GMC Typhoon, which is like a Blazer, but it was lowered and it had a turbocharger on it. And I think he bought it for like 12 or 13 grand. A few months after he bought it, all of a sudden, like, it would just die, right? And we wouldn't really understand it because my dad's very good with cars, or he was very good with cars. And so that we were all kind of like scratching our heads, like, what the hell? We did an investigation. The fuel line blew, right? It rusted and it blew. But the fuel line only connected on like certain ways, and like how it connected. The fuel line itself was $950 to source, right? So you're talking about a $12,000 car, but the fuel line, something so simple, was $950, right? And so that obviously is because the parts were so scarce. This is a car that was very rarely made. So anyway, just things like that, where exactly what you said, right? You have so many things that people want to hold on to these things, but at the end of the day, like, in terms of drivability, it's worse. It's not usable, right? So it's its lowest best, but its best case use is being used as a parts car. So you could part things out for massive margin and buy them for $1,000, $2,000.
So someone was asking about Black Rifle Coffee. I love Black Rifle Coffee, like the concept of it, veteran-owned business, supporting veterans and stuff. I just have not looked into their business as like an operating structure. I mean, I watch a lot of their skits and stuff. It's funny as hell. Like with, I think, Heather Lynn. Do you know who Heather Lynn is? No, yeah. Like some of the stuff for Black Rifle Coffee is hilarious. Like, yeah. Rifle Coffee. Yeah, I mean, I'll do more research. I'll take a look, Ken. I'll take a look.
I don't have a problem with it, and I'll support it if I see it. The problem is, though, is like, I think that there is some initiatives. I know in UDOC, the company I work for, there's initiatives to hire veterans and stuff of the like. And I've known some friends that have tried to make gun companies themselves that were veteran owned, and they just, I'm not saying it's a positive or negative. I think it's just, at the end of the day, it's like, does the company make money? And when you get it to the public realm, right? So I feel like so many of these companies at the moment have only been private, and there is maybe more of a push now to make them public. But that's part of the allure of these companies, is they are veteran owned, and once you go public, it's going to probably make it more and more difficult to keep them veteran owned, because veteran owned has to be a specific amount, right? If I remember correctly, I don't remember the number specifically, but it's like, there needed to be, in order to be considered veteran owned or female owned or black owned, you have to have a specific percentage of the company to be truly like unwavering at that point. So unless you have like special class of shares or something like that, you couldn't technically go public with some of these companies. And I'm not saying it's a good or bad thing. It's just the reality.
Yeah. No, I think, like I said, this is something that I got to take a look at. They definitely have social media presence that they've been able to capitalize on. Yeah, it could be something. I mean, I've seen their products, like I've seen the coffee itself, of course. But I've also seen other parts of like things that they sell also. So they do have omni-channel presence. You know what? Screw it. I'll do more in-depth research. All right. I like this company, so I'll definitely take a look. It's just I don't see any profitability right now, which probably. And did they come off as a SPAC? If they came off as a SPAC, I'm not a fan. But
I don't know.
hold on one second. I like when companies. Okay, they did go through They did go through the SPAC route. So it used to be Silverbox Engaged Merger Corp that they SPAC'd with. This is like one of the freaking things I hate about SPAC.
Is this still Black Rifle Coffee?
It is, but it's just it came to market via the SPAC route rather than the traditional IPO route, which is probably why not a lot of people know about it. But what's the market cap right now? I mean, because of its SPAC like legacy, if you look at the stock price, it's probably collapsed over the last. Yeah, here, let's take a look. Share screen. Okay.
Nope.
Black. Right. Let's see. Yeah, after they de-SPAC, they've just been down, and down. I hate these SPACs, man. I really freaking hate these SPACs. All right, screw it. We gotta look at their cash flows and everything else. Like it's hard to break everything down in one shot.
Yeah, for sure.
Let me see. Black Rifle.
Verizon.
Say again?
I just said Verizon.
Yeah, man. Verizon's where you want to be. Okay, let's see their financials. Okay, revenue is growing, which is always a positive sign. TTM basis, so that's good. So it means they're growing. Operating income
Still negative.
Yeah, still negative. This is one of the things I'm not a fan
If it
of.
was growing massively, but it looked like it was only growing 10% per annum. So it's like, where's their operating income going? You know?
Yeah, profitability is not there yet. Even from an operating income, why is their operating income so negative? 7 million. I mean, it's not bad. It's trending in the right direction, though. I mean, that's good. Revenue, interest expenses, they barely have any. That's good. Balance sheet. Let's see. They have only 7 million in cash. Liabilities, long-term debt, 70 billion. Common stock, equity. What the total equity is only 22 billion? Okay.
I don't know.
I don't think it's a very appetizing business, to be honest with you. I mean, maybe
If
the
it was
mission
growing faster, you know, maybe, but I think the problem at the moment that I see is like I haven't heard about them in quite a while, actually, since I don't know when they actually went SPAC, but I was hearing a lot about them before they went SPAC, you know, on Instagram and stuff of the like, and I haven't heard much since. So it could just be one of those things where, I mean, unless they achieve profitability, that it's going to be hard for them to. And the fact they only have 7 million of cash on hand and they're burning, it looked like, you know, $30 million a year is probably pretty tough. Probably has to do with the fact of why they're.
So what's with this though? That's the thing. Like, let me just look at on a TTM basis for their operating income, right? So even operating income wise, they're down. Why?
Before
What are
SG&A
they?
and everything, yeah.
What are they spending their money on? So of this, 7 is depreciation, changes in working capital. Okay. All right. Well, whatever, man. I gotta look into this more. But so far, issuance of debt. Like, why are they issuing debt?
They don't have any cash.
Hold on. Well, they paid down some of it last quarter at least. So net change in cash, negative 12 million. capex, 2 million in capex. Net issued common stock. Well, that's of course they're not doing share buybacks. It'd be stupid to do share buybacks. And then let's do.
For me, it'd be something I would stay away until they get closer to profitability.
Yeah.
But the thing that I'd be looking at is like it's a $780 million company right now. It would have to get to something that's.
Wait, really? What's their market cap?
I thought it was 780 million. This is what it said when you had it up on Robinhood.
Let me see. Black Rifle coffee stock. 767 million. Yeah, no, thank you. I'm okay.
Yeah, I mean, unless it was making, let's just give it like an inkling of it'd have to make at least 25 million before I'd even consider start getting into there. But the operating income isn't there yet.
So someone asked about this one company, ACLS. So let me explain something about this company. This one I'm doing a lot of due diligence on. Okay, this could possibly be a very, very, very big player in the future. Okay, everything is trending in the right direction, but these guys are very specialized in what they do. I'm not going to say too much because it requires a lot of really good DD, but basically, think of it
for Chris's Patreon, prices go
no,
up.
no, I'm not. Believe it or not, after the first, I am not accepting any new Patreon people for a while. I'm
Really?
not, because I want people.
Yeah.
I want people to get
it.
used to it. Yeah, so I don't want to just have this constant, like. The other thing is too, like I told you, I wanted to keep a more personalized feel too, so that want to keep it somewhat small. But this company produces these machines that are used for silicon carbide production. And so silicon carbide is worth looking into, especially for semiconductors going into the future. The company that I've been researching, the two companies I've been researching is Wolfspeed, which used to be called Cree. I don't know if you ever heard of them before.
No, you asked before this.
Maybe if you see the logo, you would see it. Like, have you seen this logo right here, Wolfspeed?
Maybe in passing. Yeah.
Maybe passing. This company is betting a heavy amount of. They're putting a lot of R&D together and a lot of work for silicon carbide, which could be a big thing in the future. But it's a risk. Axelis does the R&D and some of these machines for it as well. Like I said, there's a lot more DD that is going to go into it before I really make it a big thing. And this is one of the things that I'm a little bit like regretful when it comes to like publicly putting out that Savvy Trader portfolio, because then sometimes people are asked questions and I'm like, I'm not done with my due diligence. I just wanted to use it as a tracking thing, but yeah, it's a play on silicon carbide, which could end up becoming a big thing in the future. If you really want some,
but I mean, Chris, you say that, but I mean, this is probably the opportunity, right? Like Cashflow Chronicles and your Patreon is really an ability and access to your Discord through the Patreon. Like that's all an ability for you to clarify some of that stuff, right? So, I mean, I know that you're not going to keep up more people to the Discord, but because obviously the Patreon's going to be kept low in terms of numbers for the time being. But coming on Cashflow Chronicles is an opportunity for people to ask, like, hey, you wrote about this. And the thing is also for people that are watching, 134 of you, one, if you haven't already, I put the link for Cashflow Chronicles TV, which we'll eventually be moving to. But two, if you could like frame your question just a little bit better, it guarantees that you're going to get an answer, right? So if you're like, Chris, I saw on your Patreon X, Y, and Z, or I saw on your Savvy Trader that X, Y, and Z, or Matt, I saw 2 days ago you posted about Rocket Lab. What is it that you truly love about where they're going? Or, instead of just being like ALCS, right, or ACLS, right, it makes it like a lot easier for us to help answer the question, because sometimes we don't necessarily know about Nike or anything like that. If you pinpoint it and give it a little bit more crunch around what kind of question you're asking, it makes it more digestible for us to answer.
So Captain Dave is asking, ACLS is about Ion Implementation Company. That is absolutely true. One of the biggest buyers of ACLS, their machinery, has actually been Wolfspeed. So there's nuances to it. So the thing is though, if Wolfspeed is successful, ACLS will also get a ton of orders going as well. There's, like I said, there's a lot more to it. There's two companies that if you really want exposure to the semi industry that have performed really well over time, it's these two. One is Synopsys and the other one is Cadence. I don't know if you ever heard of either one of those.
Nope.
No?
Nope.
No. They were some of the best companies. Take a look at this for the last 10, 15 years. So everyone looks at NVIDIA and be like, oh my God, NVIDIA. And I'm like, okay, yeah. Look at this company right here, Synopsys. Their design automation company. They're up, look at this, 5x. And consistently, not this wobbly thing, whatever the hell NVIDIA has been doing, right? And same thing with Cadence Design Systems. Look at this. You know, maybe this is one of those things that we put into the portfolio, man. You know, we'll see.
Yeah. Yeah, sometimes it's those picks and shovel companies that literally just sit behind the scenes that you don't know about, right? That truly do well. Like Broadcom is one. So I saw somebody.
Don't bring up Broadcom again, man. That's my Moby fucking dick, dude. I love Broadcom, but I fucking hate talking.
I actually have it on the sticky here on my monitor to ask about once a week. So piss you off. Oh man. Well, all right, man. Well, I know get some time back. I think I'm gonna end up doing a live on my Matt Money channel. When do you think? Let's just have this quick chat here before we ended it off for the year. We did pretty successful. We had over 100 people showing up today, 130 odd people on YouTube showing up today. So shout out to those folks. Appreciate the love and support. We actually peaked out at over like 140, 150 today, which was awesome. I think it's one of our best streams yet. When do you think it's fully moving over to the new channel is going to happen, right? I know it's going to take some time. We want to get it to a place where we can monetize and everything like that. But I mean, it's already up to close to 400 people subscribing. We've got the backlog moving over to there. When do you think we can start maybe doing some co-streams on there and get that one?
I think we shouldn't. I don't think we should for a while. Yeah. 2 reasons why. I've been looking for Cashflow Chronicles and I can't find it. I just can't. Like, I searched for it on Google, couldn't find it. So if I can't find it, I'm sure other people can't find it. And I'm subscribed to it. So there's definitely a issue that that we have to contend with, which is successful transition from one to another.
Yeah.
So we'll see. We'll see where things go. I think give it another month or two, and then we'll go from there.
Yeah, because initially, what was it? I forget when you did that, and that's what spurred me to start moving some of the back catalog and stuff over there. You were like, January 1st, we're going to start, and I'm like, January 1st? I'm like, God damn. But I don't know if we both recognized how much time it would take to got to get people over there and get the search engine optimization started to move over towards that point. But it'll be nice to eventually move over there, and it'll gather us a little bit more capital on this side as well, because we're making about $300 a month, and YouTube income off the Matt Money channel, and I don't know how quickly we'll be able to do that over there and on Cashflow Chronicles.
Captain Dave, if you want to DM me on Twitter, I'd love to talk to you about some other semiconductor plays. Seems like you actually know what's going on. Whenever I mention some of these companies, I find it rare that people know. Like when he said the ion implementation, I was like, oh, someone actually knows. They've actually done some due diligence. And then when they said they hold Synopsys, I'm like, okay, that's good. That means that you know what's actually happening. Because so definitely message me on Twitter. There's a couple of promising semiconductor companies that are worth looking at, like on semi. Love to pick someone's brain who actually may be a little bit more well versed in the industry, because it's hard finding people that know the industry, the semiconductor industry, and like how to best play it, because there are sections of the semiconductor industry that are very picks and shovels, and then there are others that are heavily commoditized and that are very dependent on the market cycle of semiconductors going up and down. So you kind of want to be in the ones that can do one of these rather than, so. All right, dude.
All right, man.
Great
Well,
to-
thank you for a good 2023, and we'll kick this off again next week.
Sounds good. Take care.
Cool.
Bye.
Take care, all.